Okay, so let's stop beating around the bush because what our viewers really want to know is what trades to take. I know that it sounds like Blake is looking to sell the markets, but let's get a little specific. Let's start with you, Chris. What kind of ideas should traders be looking at? What are you putting on right now?
So when it comes to events like this, I mean, number one, this is a major catalyst, and I'm looking for volatility. I'm looking for movement. So I plan to play most of the dollar pairs today. So I have Aussie dollar, Euro dollar, Pound dollar, New Zealand dollar, dollar CAD, dollar yen, which I'm a little bit iffy on. I may not follow along with dollar yen, mainly because they tend to move in sync. It's both kind of safe haven currency pairs. So I might avoid the dollar yen, but those five for sure. So Aussie dollar, Euro dollar, Pound dollar, New Zealand dollar, and dollar CAD. Also, if you see on the bottom of my screen, or we'll talk about it in a second, the plan B is the CAD, because at the same time we have our dollar news, traders tend to overlook the fact that we have CAD news as well. And one thing I love about Canadian employment and their forecasts is they're terrible. Usually, Canada forecasts like 100,000 jobs or negative 100,000 jobs, and it falls somewhere in between. So usually their forecasts to actual are way off, and we start to see some really nice movements in pairs like Euro CAD, Pound CAD. I will be looking for some potential position trades as well on New Zealand CAD. I like CAD yen. I think Blake and I talked about that prior to this. I really like CAD yen, wanting to go short, but again, it might be at a higher level. But I think Euro CAD, Pound CAD are great for volatility. Those dollar pairs should have some movement today. And so I'm just really looking at kind of a shotgun approach to take advantage of the volatility and see what we get like the first 5-15 minutes out of the news, and see if we get some market flow for the morning. So that's my plan.
So that's your target, the extension, or you're just going to trail it as far as it can.
78.50. I don't trail. I don't trail.
Got it.
Trailer, huh?
Manually, I don't use robots. I'm a man.
It's not a robot. There's trailing stops in your broker platform, man. Let your profits run.
We can't talk about the most obvious, which is that Blake's charts look like my 3-year-old drew on them, and Chris basically has nothing on his charts.
That's not fair. That's not fair. The thing is,
that's an intelligent 3-year-old. I will say that, though. That's a technician for a 3-year-old.
As much as I like to give Chris a hard time about, here we go, Aussie's trying to break now. The thing I like to razz Chris a little bit about the auto trading, robot trading, but the fact of the matter is I wish I could do it. I wish I could program all that stuff. I have to trade like a dinosaur and do it myself. So.
And it's funny because as long as I've been trading, it's 12 years now going on Forex trading, and it took me until the last probably 1 to 2 to start incorporating more robots. What it really came down to for me to make that transition, and I'm not fully automated, but basically building things that are how I trade. So I started to build scripts a lot. I started to build, help me with the trade management, help me get in, help me participate. The one thing that bothered me was it's a 24-hour day, 5.5 day a week market. So, I'm at my computer probably 8 to 10 to 12 hours a day, and I'm still missing trades. So I thought the automation was my bridge to make sure that I can still take the trades I want to take. And if it's, at night when I'm not at my computer or on my phone, it's like I like robots to be able to help me enter. So that was, Blake, if you want to have a conversation about, making a transition into the dark side of automated trading, then we can have that talk.
Well, I'm going to tell you, it's funny because I'm in front of my computer at least 13 hours a day, and I still miss trades too.
Did I say 12? I meant 14. I meant 14.
Chris?
I was just going to say, the point that Blake makes a great point on, the risk appetite with the stocks versus dollar, as we went into 2021, and stocks pretty much have taken the cake. The stocks are going higher, continuing to drift higher, and the dollar has kind of been the sacrificial lamb, right? If we're going to see one thing, it's like, which would the world rather see? The world would rather see higher stocks than a stronger dollar. The U.S. would rather see higher stocks than a stronger dollar. We've kind of perversely started to measure the strength of the economy relative to the stock market. And, some of us look at it like this is financially engineered. This is pretty unrealistic, but it is what it is. But I think Blake makes a great point that the dollar is actually stable, all things considered, because if stocks continue to drift like this, you'd think that the dollar just get, just bashed in. But the dollar had an incredible sell-off last year from August until essentially January. We saw a solid 5-month trend on the dollar that was to the downside. So we have stabilized. I've actually had quite a few successful dollar trades this year, and I'm looking for more. I think the squeeze is very possible, but it's going to be interesting at those major levels on the DXY. If we build that base around 90 or even 89.50, or we run down and we flood those lows in order to build that base and then work our way back up. There's so many great levels technically to the upside looking for a dollar squeeze, and maybe it seems more contrarian right now, but I think that's a good technical play on the dollar. I'm flat right now. I probably missed out on another $100 of profit. I wanted to chase the Euro CAD and Pound CAD a little bit, but I'm looking at these right here. If you can see my screen, so this is Euro CAD, and this thing shot up 94 pips with in about 10 minutes. What I'd like to see is this last large 1 minute candle right here. I'm looking to see if we can have any type of pullback in there, and I'd like to resume getting long and see if we can retest the high. So let me go ahead and measure this. If I can find a way on the EuroCAD to get a retest of that level, I'd be looking at another 30 to 40 pips to the upside to retest on EuroCAD. And then Pound CAD, same thing. All I'm doing is looking at 1 minute structure here. We have this Pound CAD that jumped up very quickly. That's 87 pips. Interesting. The EuroCAD actually outpaced the Pound CAD. But same thing. We're kind of coming back into the structure area. If I can get a bounce right in here and retest the highs, that's another 27 pips. So I might be looking to go long on both Pound CAD, Euro CAD. I'm watching them on my screen. I've got a Renko chart running on one of my other monitors, and I'd like to see if it will register at least this pullback, because I need to see at least a 10 pip pullback, and we've pulled back around 19. So it's going to be close. It's going to be close, but this is the type of structure I'm watching for any type of continuation. I'm probably out of dollar pairs at this point. What I'm noticing on the dollar pairs is we've had our spike, right? We've had our spike. I know there's some structure in here. I'm currently on some of my position trades. I am short on the New Zealand US dollar for my larger accounts. For today's battle, I'm looking to get long, and I just chased it up in that shotgun approach, made a few pips on those dollar movements, made some bucks, so I'm happy with that. But I think if I'm going to look at follow through today, I'm looking at the Pound CAD and the Euro CAD. I think Euro CAD is going to be the best one. Honestly, if I had to pick, if anyone's following along, Euro CAD looks best if we can get a pullback. I'd like to see the Euro CAD drop back into this area, look to go long, retest the high, try to scalp another 30, 40 pips out of the Euro CAD today. If it just goes higher, I'm probably not going to chase it. I think at this point, 90 pips to the upside on a bullet. I want to see a pullback first, and I want to see if we can get some of these levels around 47.50 to fill. So, Kathy, if you want specific numbers, I'm looking to buy around 47.50. Stop area around 47.30. Give it a little bit of wiggle room, and then see if I can retest the highs. That's just favorable to it's about a 1.5 to 1. But it's gonna take some time. Let's give it 5-10 minutes and see if price pulls back for me.
Well, Aussie is certainly
Nice
moving
plug.
in your favor. We got up to 78.25 in Aussie, so it's definitely moving in your favor, and the trade is looking very good. I have one final viewer question, and it's a good one, which is for both of you, which is how long is this anti-dollar move going to last? How much more juice can we expect out of this trade? Do you want to start, Chris?
Sure, I'll start. I'll go to the charts. Look, I think that this anti-dollar play. Here's where I think the big levels are. So here's my daily. Look, I would not be surprised if the dollar, as far as disappointing, we can see that the dollar's selling off today, right there. We have previous lows from back in the start of the year. This was January lows. I wouldn't be surprised, and Blake and I talked about it. We talked about this contrarian play. Look, there might be dollar bears down to this same low. There might be dollar bears down to a fresh low, but here's what I think. The higher time frames I go to, the better this looks for major support and the dollar to get its groove back. I still love the idea that we have this high, this cluster of highs, and a yearly pivot on the dollar. So, look, I don't know how heavy traders are positioned, but I've been positioned like we took some love out of dollar strength earlier. We're reloading. I'm using this time right now to kind of reload on the dollar. Some better than others, but if we look left on this chart, this is a low, major low back in 2018, major breakout points back in 2014. And, we could just be in for a massive range. Now, the scary part, and this is probably what, is being forecasted as the death of the dollar and all this other nonsense. Look, if we look at this high and we look at this low, I think one could argue, like, if this is a double top, we should know that the double top actually breaks and goes down. So is there vulnerability to the dollar to continue? Yes, but I also think this is still a race to the bottom. We're doing the same thing we did back in 2012, 2013, 2014. Everyone's cut rates, and now the conversation is around who's going to start tapering, who's going to start raising rates. And as soon as, and this is what the hard part is, we have the super dovish team and combo of Yellen and Powell. And so that duo is very dovish, but I don't think it's to the detriment of the dollar being the absolute weakest currency pair in the world. I think that it's still kind of serving as the benchmark of if the Fed starts to raise rates or the Fed starts to taper, then other countries will step up as well. But it's interesting because, Canada mentioned it 2 weeks ago. And after that BOC announcement, it was a fake out on dollar CAD, and the dollar CAD started to drop the fresh lows. But technically speaking, I think the dollar is very strongly supported in areas like this. 2018 lows, equal lows. I'm looking for major divergence down here around that 88.50, if it even gets there. But if it does get there, 88.50 to me is strong support on that DXY.